Returning to my Coin Lady channel, I want to say hello to all of you. As I've mentioned before on this channel, everything is going to change this year. By the end of this year, Goldman Sachs plans to have launched 3 tokenization projects, if we take a cursory glance at their most recent announcement. As we listen to the ETF debates, I voiced my belief that the market is beginning to transition from a speculative phase to a more established one. Let's have a little conversation about it. There was a recent video of Jay Clean talking about Bitcoin spot ETFs. In his opinion, there was far too much dirty trading and illegal Bitcoin use when he was at the SEC to warrant an ETF. Bitcoin appears to be secure now, even if Elizabeth Warren and Jamie Dimon previously said the exact opposite, which is perplexing. The value of ETFs does not lie in the capital gains they will generate. It was inevitable, however, that prominent figures in the cryptocurrency industry, notably those at Ripple, would come to be known as crypto giants and coddle Bitcoin. This development runs counter to the original intent of the cryptocurrency and blockchain technology. Anticipated that 2018 would be the year that institutions begin to treat cryptocurrency regulation and centralization with the seriousness they deserve. The United States is joining other major countries in introducing or aggressively advancing crypto legislation, including Singapore, the United Arab Emirates, the United Kingdom, Hong Kong, Japan, and Europe. It would be foolish to ignore the important considerations in favor of tracking the short-term performance of the ETFs. Keep in mind that exchange-traded funds, ETFs, are a huge boon to online retailers. We saw Larry Fink and other traditional finance industry heavyweights nearly proclaim tokenization as the most significant development in the history of technology on national television. It's not the first time I've covered heavyweights getting involved in this. For example, I had Dara with Aberdeen and Franklin Templeton as a seller. These are just 2 examples among many. News is trickling out from major corporations like Citi, who are reportedly discussing the keys to widespread adoption. These companies are well informed about the changes that will occur in the cryptocurrency industry in the coming years. Nothing has ever been more revolutionary than this. It will even outstrip the internet. I completely ignored the fact that this will be accelerated much further by the coming together of blockchain and AI. Crypto institutions are seeing this market as a fertile ground for extraordinary innovation and wealth creation, and ETFs are only the tip of the iceberg when it comes to what's to come. Before it's really too late to be early, real estate investment trusts, REITs, in the retail industry must position themselves. Right now, I am not concerned with the costs. Furthermore, I am not concerned with the events of the next week or month. My focus is on the far future. Do not squander this once-in-a-lifetime opportunity. It will not come again for at least 1,000 years. Expanding on this, Subjective Views just uploaded a video. And now we're in the head of digital assets globally at Goldman Sachs has spoken about the tokenized asset market's astounding size, saying that it's already functioning at tens of billions of dollars. He focused on the technologies present, real-world applications in intraday liquidity, including repo and FX. Furthermore, the industry stands to gain micro and macro benefits by concentrating on expanding these solutions. Moving on, if we move over here, we can see the announcement made by Goldman Sachs. The 3 tokenization efforts are well known to you, and we also have quotations. While we did say that one tokenization initiative is concentrating on the US amusement complex and another on European debt issuance, we chose not to divulge any further details about the 3 projects at this year's launch. Just a few months till the US presidential election and maybe a shift in government policy regarding cryptocurrency regulation. According to him, there are potential new opportunities for the bank in this field, such as the ability to hold spot crypto assets. Other things, such execution and sub-custody, are also within the realm of interest for the firm. That is incredibly fascinating. The big players are starting to get on the bandwagon, and the floodgates are opening. This brings me full circle to BlackRock. You may recall that Larry Fink of BlackRock predicted that tokenization would surpass Bitcoin in size by a factor of 100 and that tokens represent the market of the future. As an example, let's return to his comments from this forum from, I think, the beginning of the year. I can tell you that he uploaded it in March. So, once again, they haven't recalled the true impact on the budget. This is having a profound impact on the financial sector as a whole, but it will dwarf Bitcoin in size. We are now taking a closer look at that possibility. Let's take a closer look at the situation. Presenting the DTCC's annual processing of $3 quadrillion in securities. Please tell me what Larry Fink just said. According to him, stocks are just the beginning of the financial assets that will soon be tokenized. What becomes of the highly efficient networks that lead the tokenization revolution? It's hard to fathom. We are aware that through their institutional DeFi projects, Ripple is aiming to put the XRP ledger in the vanguard of this. This fills me with joy. Keep in mind that Ripple became a member of the ISDA on August 4, 2023, nearly a full year ago. In this context, derivatives officers refers to individuals working in positions such as those at BlackRock, JP Morgan Chase, Goldman Sachs, Mellon, the London Stock Exchange, and the CME Group. The latter is particularly important to note, given that Ripple, also known as XRP, has only recently become a member of the former. Additionally, the former includes Bank of America, the Intercontinental Exchange, and 79 other countries' exchanges. The list is endless. Here is the complete news release from the CME Group, commencing July 29. CME, CF Internet Computer Dollar and XRP Dollar reference rates and real-time indices will be introduced to our growing suite of benchmarks, allowing for transparent pricing on 2 additional cryptocurrencies. Once again, it is worth noting that XRP is closely linked to numerous derivatives marketplaces and organizations, such as ISDA. The International Swaps and Derivatives Association, ISDA, has been actively involved in improving the global derivatives markets since 1985. With 1,000 member institutions from 77 countries, it is truly a formidable organization. Adding to this, it is worth noting that the Policy Director APAC at Ripple is also employed by the ICA or had a stint at ISDA for 5 years. This is completely absurd, especially considering that the derivatives market is worth more than $1.2 trillion. Money is going to be a little bit more now, in my opinion. Additionally, this section explains why the inclusion of XRP in the real-time reference pricing for derivatives maintained by the CME Group is crucial, since the major concern this is totally Smoke Dog's fault. The market is where worth is ultimately determined. In the realm of Ripple and XRP, derivatives are just one link in the value chain that can be optimized with DLT. Thank you for watching my channel and for subscribing. I'll see you later.